Well, I'm so glad you could join us today on a Tuesday. I'm Marlon Bowling with you, your tour guide to the ag commodities, and we're going to take a look at what may be affecting the ag commodity trade today with a little help from the one and only Brian Hoops, president of Midwest Market Solutions. He is in Springfield, Missouri. He joins us right now. Brian, I was checking the wire before I came down into the studio here. I didn't see any overnight export sales news this morning. Did you?
Good morning, Marlon. No, there was not any export sale announcements this morning. We were pretty strong last week and had some sales yesterday, but shut out this morning as far as any fresh business. So, we don't have a tremendous amount of news overnight. Of course, crop progress numbers that came out yesterday afternoon give us a little bit of direction. We're getting close to 50% harvested in corn. We're over that pace, or a little around 60% in soybeans. And once you hit that mark, not only does USDA cease putting out good to excellent ratings for corn and soybeans, but also you typically talk about harvest lows. And I think we're in that seasonal period right now where we're trying to carve out those bottoms in the market. And for the corn market, the upside is likely muted because of the 2.1 billion bushels of carryout. But soybeans, the stocks are much, much tighter, and all it would take is a stretch of really hot, dry weather in Argentina or Brazil, and we could see soybean prices, I think, move a tremendous amount to the upside during this time frame.
Now, explain the mechanics of why you typically would have a seasonal low this time of year. Is it just because you have the maximum backlog of grain at the local elevators because of harvest?
Yeah, when we talk about seasonals, it's really a reflection of history and how the market has reacted over a period of time. And so historically, you go back 10 or 15 years, right about this time, the first, second week of October is when the lows for the futures market are typically in place. And a lot of that has to do with farmer storage situations. A lot of the crop gets, some of it gets delivered and sold, puts pressure on the market. But the vast majority, especially in the last several years, because of increased farmer storage capacities, they're holding more off the market and putting more into storage, and that's not putting as much pressure during the harvest time frame as what we'd seen maybe 15, 20 years ago. So typically, you get a wide basis at this harvest when there's some farmers selling, and then it tightens up as that selling dries up as the rest of the crop gets put into storage facilities and doesn't get sold until maybe after the first of the year.
Brian, I'm hearing differing stories on what the agricultural weather is in South America. I'm hearing some issues, mainly, for example, in western Brazil, are really getting hot and dry, and it's getting to be a growing concern. Even though they are planting and they're putting in what is expected to be a record crop again this year, are they having that much trouble?
Well, yeah, there's some reports. We're hearing more northern Brazil as having some issues, and so there's even maybe some replant being done because it was too dry to get the crop to sprout, and so they had to go in and replant it. But this is the type of thing that we're talking about. The market assumes that we're going to have record yield. We know that they're going to plant more acres than they did last year, and so the assumption is we're going to have this record crop. But Mother Nature always rears its head. There's always concerns and issues during the growing season. No season is perfect, and it's those times where it gets too hot, too dry, that the market puts in a lot of weather premium until it rains, then we take it back out. So we're very close to where I think we're going to see some weather premium being put into the marketplace just because of what's going on in Brazil, especially if some of these rains that are forecasted turn out to be a bust and we don't see any rain. We could see really a push higher here, especially in the soybean market where stocks are tight.
Well, let's walk through these. Overnight trade, our quotes are from bar chart here. In December, corn finished just a penny lower at 4.89. Wasn't much going on in the overnight session. Soybean trade, we had November 6.25 higher at 12.92.5. So still well under that $13 benchmark, but it did bounce a little bit last night. In the wheat market in Chicago, we had December down 5.25 at 5.72 per bushel. In Kansas City, had December trading about a half-cent lower is all. We were at 6.68 On the spring wheat trade in Minneapolis, we were down just a quarter of a cent at 7.28.5. And let's look at what the cotton market was doing here this morning. In cotton, we had December 89 points lower at 84.26. Also wanted to touch on some of the outside markets. How about crude oil? West Texas Intermediate crude oil down 16 cents. We had November at 86.50, and the U.S. dollar index, well, today, at least for now, it's up 171 points on December futures. We're at 106.205 right now. We'll come back and we'll talk more with Brian Hoops, and we'll focus on our livestock trade coming up after this. All right, Brian, we were talking during the break. We're talking with Brian Hoops, by the way, president of Midwest Market Solutions. We were talking during the break about the cattle market, and I was scanning across the printout of activity yesterday from cash cattle trade all across the plains, and basically it was a blank page, Brian. I didn't see anything happening out there. What do we have to talk about when it comes to the cash cattle market this week? What's going to guide that?
Well, typically Mondays you don't see a lot of cash action unless the Packers are really short bought, and they were last week. And so we saw some cash trade a little bit earlier in the week. This week we have cattle on feed report coming out Friday afternoon at 2 o'clock, and the estimates look fairly friendly. But typically you don't see cash action until just before or just after that report. So it could be a late week cash trade this week. The show list numbers are down by 3,000 head compared to last week. 223,000 head is the estimates on the show list numbers. The product values finally found some footing and bounced and closed higher yesterday. So that'll help the Packers start to regain some of their lost margins. Unfortunately, it looks like, could be another 620,000 head kill week, which isn't all that exciting. It helps the Packers, again, reduce some of their margins and keeps the box beef values supported, but it doesn't tell us that there's a huge demand for the cattle. So we may be looking at another week of slow exports later this week on Thursday, and just some jockeying around trying to anticipate where that cash trade is going to develop. It looks like it could be probably steady, maybe a touch higher this week is kind of the early week calls that we're hearing.
All right, so if that's the case, let's talk about this a little bit as we get closer to the end of the year here. What normally happens, and I know this is an unusual year because we have almost unprecedentedly tight numbers out there in the country, but what normally would happen between now and the end of December when it comes to the demand here?
Well, typically we slow down a little bit after the Labor Day season. That's kind of considered the end of the summer, end of the grilling season. So demand starts to soften, and then we start to pick back up as we start talking about holiday demand. And that's true for beef and pork. Is you don't typically talk about beef demand for Christmas or Thanksgiving, but it is becoming more of a common feature for some type of Christmas parties, going into the New Year's type parties, and that's when you start to see a little bit of a pickup in the demand once again. So we're kind of in a lag time of year, but I think it's going to get close as we get into the end of October, early November, we start talking about that holiday demand again, and that should help us as far as recovery efforts. Just would love to see some of those exports improve as well as the consumer demand.
Touching on how we closed yesterday, let's review on the live cattle board yesterday. We were mixed. We had the December 20 lower at 186.50. On the feeders, when we went home yesterday, we had that November contract $1.65 lower. They really felt the heat. 249.92 is where we closed yesterday. And lean hogs had December down $1.20 at 68.30. We'll see if they can rebound here today. Brian, thanks for the information. Covered a lot of ground, and that was good stuff. Brian Hoops of Midwest Market Solutions with us here on a Tuesday morning. Suzanne, good morning to you.
Good
We're
Tuesday.